All right, welcome to the deep dive.
Great to be here.
Today, we're really digging into this pretty complex mix where you've got economics, cutting edge tech, and even the whole idea of money kind of bumping up against each other.
It's a huge area, yeah. And our guide for this is basically an article that summarizes a really detailed chat between investor Jason Hartman and Mark Moss, who's big in the Bitcoin space.
Right. And what we want to do, our mission here, is to sort of cut through the chatter, pull out the really key stuff from what they talked about.
And help you see how these things connect, often in surprising ways,
Yeah.
especially with how fast everything's changing.
Exactly. So we'll be looking at things like shifts in real estate,
Yeah, what's actually happening there?
what AI might really mean beyond just the headlines,
Mhm.
trying to get our heads around how inflation actually impacts your wallet.
And then, where the something like Bitcoin fits into this whole evolving picture.
Okay, so let's jump right in. Hartman kicks things off talking about real estate. He sees the market kind of, calming down from that crazy period we had.
Yeah, cooling off. And he actually points to note investing as maybe a more interesting alternative right now.
Note investing. Okay.
That's a really key point he makes. Shorter-term note investments. So you're essentially buying the mortgage debt.
Not the property itself.
Exactly, not the property. And he sees potential for some attractive returns there, mentioning figures like around 12% annually.
Okay. And in a market where houses aren't selling as fast, that approach might feel a bit more, manageable than owning the whole thing.
Definitely less hassle, perhaps.
And he also brings up some, fundamental things still happening, especially with rentals.
Oh, absolutely. I mean, with home prices still way up there and mortgage rates soaring,
Yeah.
buying a house is just, it's off the table for a lot of people.
Right.
So what happens? More renters just stay put. Landlords see higher renewal rates.
Which kind of counterintuitively boosts rental yields, even with new apartments being built.
Exactly. Even with new supply coming online, that core demand from people who just can't afford to buy keeps rents, fairly strong.
Huh. So you see all these cranes building apartments, but the underlying pressure is still there.
And this is where the big players are moving in. Wall Street is getting really aggressive in the single-family rental market, SFRs.
Buying up houses just to rent them out.
Yeah. And build-to-rent communities are popping up more too, partly because remote work means people want more space, maybe outside the main cities.
It reminds me of that analogy they used in the source. Like, the housing market's a crowded harbor, and the big ships, the buyers, they can't easily dock, so everyone's sort of dropping anchor in the rental market instead. Creates a bottleneck.
That's a really good way to picture the dynamics right now. Okay, so pivoting a bit from the physical world to the digital, Mark Moss brings up this really interesting idea. He calls it the intelligence age.
The intelligence age.
So,
following the industrial and information ages.
precisely. He sees it as the next big phase.
And his main point, which might be a bit uncomfortable for some,
Yeah.
is that AI won't just automatically make everyone smarter or, better at their jobs. It's more like a magnifier.
That's the absolute crucial insight, I think.
Yeah.
AI acts as a force multiplier, right? But mainly for people who already have those core skills.
Like what? Strategic thinking, critical analysis.
Exactly. Problem solving. If you have that foundation, AI can make you incredibly productive. Amplify what you can do.
But if you don't,
Yeah.
like if you don't know how to ask the right questions or structure your thoughts,
Then AI might just be, a fancy tool that doesn't really move the needle for you. It might not deliver that much value.
so the worry isn't necessarily that AI takes all the jobs,
No, not necessarily all of them.
but it pushes the really valuable work higher up, makes it more cognitively demanding.
Right. The question then becomes, is our workforce actually ready for that? A world where maybe entry-level thinking tasks get automated away.
And the jobs left need more advanced skills.
Yeah, much more advanced cognitive ability.
He had that great line, didn't he? AI is like an exoskeleton. It doesn't make you smarter, it amplifies who you already are.
Which really hammers home that point about asking the right questions.
Yeah.
Just typing a basic prompt into ChatGPT.
Isn't the same as someone who really gets the problem?
Not at all. Someone who understands the nuances and can prompt the AI strategically will get vastly different, much better results.
So the real power of AI isn't just, automating emails or writing a simple summary.
No, it's about using it for the heavy lifting. Deep research, finding competitive edges, strategic analysis, those sorts of higher level tasks.
Got it.
And, this fits into that historical pattern, technological displacement or
Right.
what economists sometimes call creative destruction.
Right, where new tech always destroys some old jobs.
Think about the Luddites, the textile mills.
But it also creates new ones, often better paying ones eventually.
Always has, historically.
Hmm.
So the person taking orders at the drive-thru, maybe even the Uber driver down the line, their roles might get automated.
That's the argument.
But Moss suggests new roles will pop up, things we can barely even imagine right now.
Like what?
Well, maybe roles in developing these AI systems, or what he called vibe coding.
Mm-hmm.
Sounds interesting.
Vibe coding, what's that?
He described it as sort of understanding and structuring user intent for these really complex AI systems. Or maybe using no-code tools to build sophisticated apps without traditional programming.
Huh. It sounds like AI is sort of designed to handle the routine stuff, the low-level thinking,
Yeah, stripping that way.
which frees up humans to focus on things that need, I don't know, creativity, empathy, complex problem solving, that human touch.
That unique human intuition, exactly. The core message seems to be that real value comes from spotting a problem and then building something to fix it.
That mindset.
That mindset, he argues, is the key to long-term prosperity. Not just relying on, say, social safety nets, which he questions the sustainability of.
Okay. All right, let's shift gears a bit. Let's talk about something that hits everyone right in the pocketbook. Inflation.
Oh, definitely. And Jason and Mark really spend a lot of time on this, how inflation just quietly eats away at your real wealth.
Especially when, technology should be making everything cheaper, more abundant through efficiency gains.
Right. There's a paradox there. And they are particularly critical of the official measure, the CPI Consumer Price Index.
They think it's, well, manipulated?
They argue it is, yeah,
Right.
through things like substitution.
Which assumes you'll just buy chicken if beef gets too expensive.
Right. And hedonic adjustments, which try to factor in quality improvements, but might end up hiding the true price increases.
Okay.
The fundamental problem, as they frame it, is this. Tech might save you hours of work or make goods incredibly cheap to produce. But the devaluation of the currency, the inflation, effectively steals that efficiency gain right back from you, takes away the value.
So they suggest a more, let's say, honest measure of inflation might be closer to how much the money supply is expanding.
Yeah, they point to figures around maybe 10% a year
Yeah.
based on M2, which is that broad measure of money circulating.
Okay. So you end up with this constant battle, this tug of war.
Exactly. Technology is fundamentally deflationary. It wants to give you more for less, more time, more prosperity by creating abundance.
But the fiat currency system, through inflation, keeps pulling that purchasing power back.
Constantly eroding it.
And this is where the conversation takes a pretty significant turn, right? Connecting all this back to Bitcoin.
Yes, and what Mark Moss calls the new Renaissance, or maybe Renaissance 2.0.
Okay, intriguing. Tell me about that parallel.
Well, he draws this really interesting comparison to the original Renaissance back in the 1500s.
Right.
That period was fueled by basically three key things. An explosion of information, thanks to the printing press, a form of sound money, the florin coin, which was widely trusted,
Okay.
and expanding global trade, which allowed ideas and innovations to spread.
Got it. Information, sound money, trade. So, today.
Today, he argues, we have the internet and AI as the new information explosion.
Makes sense.
Globalization, despite its challenges, provides the fertile ground for economic activity.
And the third piece.
And potentially, Bitcoin as the new form of sound money.
Ah, okay. So the argument is that Bitcoin gives people a way to opt out.
Essentially, yeah, to opt out of a traditional financial system that they see as inherently unstable, inherently inflationary, because of government and central bank actions.
So Bitcoin is positioned as a tool to maybe capture the real benefits of all that technological deflation we talked about.
That's the idea, a way to preserve the value that technology creates.
He points to its track record, right, as a store of value.
He does. Noting how if you measure many traditional assets, not in, say, US dollars, but in Bitcoin terms over certain periods.
They've actually gone down in value relative to Bitcoin.
Exactly. Even if their dollar price went up.
But what about using it? Like, for buying coffee, the base layer of Bitcoin is slow and can be expensive for small transactions.
True, and he acknowledges that. Using the main Bitcoin network for everyday small purchases isn't really practical.
So
he highlights layer 2 technologies, things built on top of Bitcoin, like the Lightning Network.
Lightning, okay.
And those allow for almost instant, very, very low-cost transactions. makes those small payments feasible.
And it makes sense with Gresham's law, too, right? That bad money drives out good.
Explain that.
Well, people tend to hoard the good money, the stuff they think will hold or increase its value, like Bitcoin maybe,
Yeah,
and they spend the bad money, the inflating fiat currency first.
that's a very good point. So Bitcoin might only see widespread use as like a daily currency if the traditional options become really undesirable, maybe in a crisis scenario,
Yeah, perhaps.
which kind of leads into maybe the most futuristic idea they talked about.
Okay, I'm ready.
Merging AI and Bitcoin to create what they termed the machine economy. The machine economy. Wow, okay, that sounds sci-fi.
A little bit, yeah. But they envision AI agents, software programs, bots becoming much more sophisticated,
How so?
able to plan, analyze data, make decisions, even carry out business tasks completely on their own, autonomously.
Like an AI that could research a market niche.
Exactly. Then buy a domain name, set up an online shop, manage the inventory, all without a human needing to step in.
Okay, I can see that potential.
Yeah.
But for those AI agents to be truly autonomous,
They can't be tied to traditional payment systems, right? Systems that need human approval or are linked to legacy banks.
right, they'd need something else.
Exactly. They'd need permissionless, borderless, probably censorship-resistant money.
Oh.
And Mark sees this machine-to-machine economy where AIs are paying other AIs for data, for services, for computing power, whatever it is.
That could be the killer app for Bitcoin as a medium of exchange.
Potentially, yeah. That could be where it really shines in that role.
That's a pretty profound idea. Imagine, like, a self-driving delivery truck.
That operates as its own little business unit. It earns money delivering packages, and it automatically pays for its own charging, its own maintenance, road tolls.
Operating completely as an autonomous economic entity.
Yeah. It couldn't really do that if every single payment needed a human to log into a bank account and approve it.
No way. You would need a system built for machine speed, machine logic, permissionless transactions.
Which brings up that sharp question Jason asked about the prosperity paradox.
Right. If tech makes us so much richer and more productive,
Doesn't that increased wealth just lead to more spending, more consumption?
which could just drive inflation right back up again anyway,
Yeah.
undermining the whole thing.
Yeah.
And Mark's response was, essentially, yes, that could be a factor. Increased demand can push prices up.
But
But the primary driver of the really damaging systemic inflation, in their view, is government interference. It's messing with natural market forces.
okay.
The core issue, as they see it, isn't the technology itself or even free markets operating normally. It's that our governing structures, our regulations, our monetary policy, they're still stuck in an industrial era mindset, basically.
Ill-equipped for this decentralized, super fast, exponential world that tech is building.
Exactly. Like you mentioned, education systems may be preparing people for factory jobs that aren't there anymore.
Yeah, that kind of disconnect.
It's a similar idea. These older legacy structures just struggle to keep up with the speed and the fundamental nature of innovation driven by AI and decentralized money.
Wow. Okay, so after walking through all of that, I mean, the real estate stuff, the AI as an amplifier, the inflation fight, the Bitcoin Renaissance idea, this machine economy, what's the bottom line? What's the essential takeaway for someone listening? How do we navigate all this?
Well, that Shopify example they brought up is pretty telling, I think.
Remind me.
That company now apparently requires AI fluency for its employees. It's part of performance reviews now.
Whoa.
That's a huge signal, right? It's not enough just to know about AI anymore. You actually need to be able to use these tools effectively.
So it's really a wake-up call. Like, adapting isn't just a nice to have, it's becoming essential to stay relevant.
Absolutely. And the benefits of this new age, especially from AI, they probably won't be spread evenly.
Meaning?
Meaning those who actively dive in, learn, and leverage these powerful tools now, they're likely the ones who are going to thrive disproportionately.
Okay. So let's just quickly recap the journey we took through these ideas. They're all pretty interconnected.
Yeah, they weave together.
We saw the traditional housing market cooling off, pushing some investors towards alternatives, like notes maybe offering decent returns.
And driving big institutional money into renting out single-family homes.
Then we explored how AI might not just make everyone smarter, but act more like that exoskeleton, right? Amplifying skilled thinkers.
But demanding that everyone else upskill significantly to avoid falling behind.
We touched on that historical pattern, tech destroying old jobs but creating new, often higher value ones.
Which really underscores the need for that problem-solving value creation mindset, rather than just relying on old safety nets.
Then the whole inflation discussion. how it secretly steals wealth, how the official measures like CPI might be flawed.
And how it basically fights against the efficiency gains that technology should be giving us.
Right. And then we got into the, let's say, more controversial idea of Bitcoin as maybe a form of sound money for this new tech renaissance.
Yeah, offering a potential opt-out from traditional finance, acting as a store of value, even if its daily use for payments is still mostly on layer 2 solutions for now.
And finally, that really futuristic concept, the autonomous machine economy.
Driven by AI agents needing permissionless money like Bitcoin, potentially making that its main use case as actual currency.
And kind of underpinning all of it was that basic tension, right? Technology wants to make things abundant and cheaper. It's deflationary.
While centralized government actions often introduce inflation, working against it.
So the core takeaways seem to be about understanding these cycles, embracing tech that boosts efficiency,
Using AI strategically, not just passively.
finding tools, maybe like Bitcoin or hard assets, for financial self-defense against that inflation.
And just accepting that continuous learning and adapting. They're not optional anymore. They're non-negotiable.
It's definitely a lot to process, but it paints a picture of a future where being informed and proactive really pays off.
It really does seem that way.
Which leaves us and you with this kind of final thought to chew on. If these AI agents operating autonomously become a really significant transacting part of the economy, and they need permissionless systems like Bitcoin just to function, how does that fundamentally change the economic game? How does it challenge the power of, traditional centralized institutions, banks, governments?
Yeah, what does economic autonomy even look like when machines are also players, generating and exchanging value completely on their own?
It's a huge question. Could really reshape how we think about wealth, ownership, everything.
Definitely something that could unfold in fascinating ways.
Absolutely. Well, definitely food for thought. Thanks for joining us on this deep dive into the sources today.